Hello everybody and welcome to my channel. We're here today to talk about Relx, stock ticker REL, a major player in the FTSE 100 on the UK stock market, and whether its stock presents a compelling buy opportunity for 2026 and the future. To answer it, we'll break down the company's business model, its historical financial performance, recent stock movements, and what professional analysts are saying right now about the stock. First, let's understand what Relx as a company is. Relx is a global provider of information-based analytics and decision tools. They used to be a publisher, but they are no longer that traditional publisher. They are now a data and technology company. Their business can be split into four key segments. The first one being science, technical and medical. So think about medical journals and research data. The second would be risk solutions. So they provide decision tools for credit, fraud prevention and identity verification, which is a very high growth and high margin area. Thirdly would be their legal department, where they provide legal and regulatory information and analytics. And finally would be exhibitions. They organise large-scale digital and face-to-face events, which is steadily recovering from the pandemic in 2020. First, let's take a look at their financial results, including their revenue, profit and free cash flow, which are very impressive. Relx does seem to clearly demonstrate a sustained decade-long upward trend, with revenue consistently climbing upwards, reaching over 12 billion in 2024. And as you can see, in the past 5 years, that growth has seemed to have accelerated even faster. This will be due to their movement away from their more traditional publishing into their online subscription-based model, which they are now following. The profit is also showing steady growth, hitting almost 8 billion in 2024. The fact that they have around 12 billion in revenue and almost 8 billion in profit shows what a high margin, high quality business this is. Free cash flow is also strong, as shown on the chart on the right, growing at a fast rate in the past few years. This is the hallmark of a truly quality business. It shows that Relx isn't just growing its top line, it's efficiently converting that revenue into profit and, most importantly, free cash flows, which is the lifeblood for dividends and future investment within the company. This stability, built on the recurring digital subscriptions, makes Relx attractive for long-term investors seeking low volatility growth. As just mentioned, they have plenty of free cash flow to reinvest into the company. Now let's take a look at what they are getting up to with this spare cash for their reinvestment into the future. Relx, as you can see here, have got very high ROIC and ROE, which stands for return on invested capital and return on equity. Their ROIC stands at over 21% and their return on equity at almost 56%, which is extremely high. And as you can see from previous years, it is stable and steady, and it is not like it is a one-off event with these numbers being so high. A consistently high ROIC like this is a sign of a company with a powerful economic moat, meaning basically a competitive advantage. They have pricing power and a structural advantage that allows them to generate exceptionally high returns on every single pound that they reinvest within the company. This is why analysts often rate Relx as having a wide moat, something which Warren Buffett always speaks about. Now let's take a look at the share price recently, in the past year and in the past 5 years. Remember that the share price is not always a true indication of how the underlying business is going. The year to date so far, and we are currently in early December, is down almost 20%. However, the 5-year chart shows that it is up 63%. Over the long term, a company's share price will tend to follow what the company's profits are. And in the case of Relx, this drop in price this year may be an opportunity to buy into a high quality company. With the stock now trading at around £30 per share, despite no fundamental change in the business and still showing a high quality, growing company, both top line and bottom line. For a long-term investor, this drop now presents a potential entry point to buy a truly highly quality company at a discount. Now let's see what the experts think and have a look at the analyst insights. On the left is Yahoo Finance, which shows an overall highly positive recommendation, with all of them recommending a strong buy or buy. The average price target that they have given is almost £45 per share, which implies a potential upside of almost 46% from its current share price. On the right, we can see Morningstar's analysis of the stock, with themselves giving the stock a 5-star rating, the highest a stock can get. Morningstar have also given Relx a wide economic moat rating and exemplary capital allocation rating, both of which are very rare to see within a company. So for Relx to have both of them, this is a great sign for a long-term business. So now we have to consider all the evidence and answer the question, is Relx a buy heading into 2026 and ahead? The business is very high quality, with a recurring revenue model built on essential data and analytics, and they seem to have a wide economic moat. The financials show decades of consistent growth in revenue, profit and free cash flow, with exceptionally high returns on capital. The opportunity presented is an almost 20% drop in share price year to date, to leave the share price sitting at around 21 times forwards earning in the calendar year coming ahead. The outlook from management remains positive, and analysts also believe that the share price is undervalued as Relx continue to invest in their growth drivers such as AI and digital services. Whilst I don't yet personally own any of Relx, I am watching it very carefully and think it's one of the best buying opportunities in the FTSE 100 at the moment. Remember that this is not financial advice, and please do your own research before making any decisions that could affect your own money in future. Thank you for watching. If you found this analysis helpful, please like this video and subscribe for more investment deep dives. This is a new channel and I look forward to being able to help more people investing, especially within the UK markets.